Good morning, everybody. Welcome to another Daily Market brought to you by Mike Bjork. Today is Friday. Happy Friday, everyone. And it's July 26th. We got one economic data for today, but it's a biggie. It's the GDP for the second quarter. This is our initial look. We usually get three of them. So, second one will be out next month in August. And then, of course, the final one will be in September. However, the first quarter, as we saw, was at 3.1%, which was a pretty decent number. However, there was a feeling of a drop of about 1.9% for Q2, and it came in better expectations at 2.1. Now, there's a couple good things about this and not so good. The good things is that we see a pretty good spike in consumer spending. So consumers were feeling a little bit better in the second quarter, and where retail sales and a lot of those things were up for the second quarter. However, on the business side of things, business investments, those declined a bit. So those weren't on par. So we want that obviously to be brought up, so that way we can obviously continue to see job growth out there. So again, it was kind of mixed bag. Good on the consumer side, that people are spending more money and feeling a little bit more comfortable. However, we see businesses kind of pulling back on their spending in reinvestment. So let's go jump ahead here to the headline news. Stock market's up. They like the GDP number. There's stuff to like about it. And of course, as I indicated, the business side of things, the investments, uh, is a little disappointing. We do got some corporate earnings reports being released today, so we got that going on, and some, of course, we've been getting the bulk of it's been impressing the market, so we have been beating its estimates. So let's jump over here to the mortgage-backed securities. We are pretty much flat up. We've been testing the Fibonacci level here, and then we also got the 25-day moving average, been testing both of those. However, we are still above the Fibonacci currently, about up 2 basis points, and hanging in at 2 points. I'm sorry, yeah, 102.27 or 28 exactly, pretty much right on that dot, where the line Fibonacci is at 102.274. So we're just a hair above it right now, and hopefully it maintains. We got the double support, which helps us to maintain this momentum. But we got some news coming up next week that could alter things. We got the big ones next week. The Fed meeting coming up next week. We got jobs reports coming out on Friday. Of course, we got ADP on Wednesday and industrial job claims on Thursday. And then on top of that, another biggie will be the PCE, the personal consumption expenditure. Now, with the Fed rate hikes or Fed rate cut on Thursday, or I'm sorry, yeah, be that Wednesday, excuse me. Uh, that could be dependent on how the market reacts coming ahead. Now, with the PCE, that's the Fed's favorite gauge for inflation. If we see that rise and the Fed's cutting rates, that could have a negative effect on the bond market. Even though they're cutting short-term rates, the bond market may not like that, primarily because anytime there's a concern with inflation, inflation is the biggest enemy of bonds, and that will eat or erode the value of a bonds over the lifetime, over the 30-year period. So that's why you'll see sometimes with rate cuts, we have the adverse effect because of the concerns for inflation, and that could be a possibility for next week. So be very cautious next week. I would suggest if you're in any transactions, maybe float a little bit until then, but be careful with it. Have your guy on the finger with a ready to lock stance here. So just be cautious because we could potentially drop down to the 50-day moving average if that is a scenario in there. However, if the PCE comes in tame and the Fed cut, we could have a positive reaction and help that could help us out on the other side. But again, just be a little cautious here. We did see CPI and wholesale have a slight uptick in their last reports. So let's kind of advance this to the yields. Yields are where we were before at the 207 range right now. And so again, as you see, we've been kind of in the sideways pattern for quite a while right now. And we got 50-day moving average on the decline side. We got the 25-day moving average, which is now kind of moving in a sideways pattern, kind of even with the Fibonacci here in the yields. So again, kind of more sideways patterns we've been seeing for the most part. We're trying to get some type of leeway one way or the other, and next week could be that week. Could break it one way or the other. So again, just be cautious going forward. However, there's no change in pricing in mortgage rates, so mortgage rates are about the same as what we left off. If yeah, that's about it. So, anyways, if you guys are looking to buy or refinance, please feel free to reach out. I am a loan officer. I can assist you in those endeavors. My company does serve all 50 states. We do have a couple proprietary loans, including the all-in-one loan, which is a fantastic loan to help people who have cash flow to pay off their mortgage much quicker and save hundreds of thousands of dollars. We got Home Funded, which can help a lot of people get into homes with a down payment assistance. And then, of course, we got the usual, like everybody, jumbo, conventional, FHA, VA, USDA. And we also got some niche loans that some people may or may not have. We got loans specifically for real estate investors. We got bank statement loans that are really good for self-employment employed borrowers. And we also got loans for foreign nationals. So if any of these uh, strike a bell, please feel free to go direct message me is the best way to reach me. If for some reason you do want to call me, go ahead, but please leave a message. I do get a little busy and I do return messages. I don't always answer the first call, so again, it is important to leave a message if you want me to call you back. All right, you guys have a great day. Enjoy your weekend. We'll catch you guys on Monday. Thanks for watching. Bye bye.